Welcome to Blythe Business News. For this edition I'm joined by Jaco Prinsloo, who is Managing Director and Chief Executive of Sylvania Platinum Limited. Sylvania, listed in London on the AIM market, a ticker of SLP and a market capitalisation of around £186 million. One of those rarities, an AIM-listed mining company which pays a dividend. Jaco, welcome back on the show. I'm going to ask you about the recently announced joint venture with Lindbergh Mining. I'm going to come on to the financial terms in a moment, but before we get on to the finances, what can you tell us practically about this joint venture, how it's going to work?
Thank you, Tim, and thanks again for having me. It's always nice to have the opportunity to share a bit more information. Yes, we are quite excited about this announcement, and as you've seen, we have just announced a new the conclusion of an unincorporated joint venture agreement with Lindbergh Mining Company, or I'll briefly mention LMC, they're known, who owns and operates an existing chrome mine on the northern part of the western limb of the Bushveld complex in South Africa. So under the terms of the JV, Lindbergh will contribute both historic chrome tailings, or dump as we often call it, as well as fresh run-of-mine ore from the existing open-pit mining operations. And then Sylvania, meanwhile, will be contributing our chrome and PGM beneficiation experience and skills, as well as funding to construct a new PGM beneficiation plant, as well as a secondary fine chrome recovery plant to recover both PGMs and chrome on behalf of the JV, and in which we will then also share in the both the revenues from sale of both chrome and PGMs produced by the JV. I think it's a particularly interesting and exciting opportunity for us for a number of reasons. Firstly, through our partnership with Lindbergh, we are diversifying our operations away from just relying on a single host mine or mining company, as our current operations are. Secondly, we are diversifying our revenue stream, so we are not just relying on PGM revenue from this project. We will also be sharing in the chrome revenue from the project, unlike our current operations. And then finally, due to the geographical location of the project, we are strategically very well positioned on the northern end of the western limb of the Bushveld complex, where this will be the first kind of operation or chrome and PGM from PGM beneficiation plant from chrome tailings in the area. So that strategically would position us for future opportunities very well in the area. And I think that is quite exciting from this point of view.
What can you share with the viewers, with the investors, about the actual terms of the joint venture agreement?
Yes, so as I first just mentioned, it's an unincorporated joint venture that we're forming. So we will both, the partners will be contributing, skills and assets and also material to the joint venture. So it's an unincorporated JV between Lindbergh Chrome Mines. I think also worth mentioning, Lindbergh is a subsidiary of the Cromtech Mining Company, who owns an existing established chrome recovery operations already on the western limb. So the JV is between those two, our Sylvania and Lindbergh Chrome Mine. The second part then, in terms of what we will be doing, is it's a construction of a new fine chrome and also PGM beneficiation plants, so that we can treat both a combination of historic chrome tailings as well as fresh run-of-mine material generated by LMC on the mine, so that we can produce both PGMs and chrome for the benefit of both parties. So the partners will have equal participation interest in the joint venture. So basically a 50-50 joint venture, where we will equally contribute towards capital for the project, as well as sharing equally in the profits of both the chrome and the PGM produced by the JV. In terms of the capital requirement, Sylvania will initially fund the capital for the new build project, as well as initial working capital for an initial period. And that will be by means of, Sylvania therefore will advance the capital portion of our JV partner, Lindbergh, by means of a loan to LMC, which we will secure in the meantime by means of a special material bond over existing tailings material on site. There's already about 2 million tons of existing tailings material, which we will be treating as part of the joint venture. From a duration point of view, although LMC has remaining life under the existing approved mining right of about 17 years, at least 17 years remaining, we have concluded this initial agreement on 10 years initially, and it's largely based on the period required to treat the historic dump material. But the parties have agreed to make a provision in the current agreement that we can extend potentially into future by mutual agreement if there's a need and we want to. So from a capital requirement point of view, we're looking at it between $30 and $33 million estimate capital requirement for the build phase of the project. But I mean, we're getting a very attractive IRR, which significantly exceeds Sylvania's internal hurdle rate of at least 20%. And, just in simple payback terms, it's a simple payback would be less than 3 years, even if you consider the current PGM and chrome market prices. So, yes, quite a robust project and, quite decent terms.
Okay. I mean, the joint venture project, how similar is it to your existing Sylvania operations in the eastern and western limbs? And what's it going to do? What's it going to contribute to Sylvania's production?
Okay. Yeah, I think the beauty of this project is that it is actually very technically almost identical to what we're already doing. I think, the process circuit, the technology we're using, the configuration is very similar to our existing operations, both in the eastern and western limb of the Bushveld complex. And I think that's part of the reason why we've been successful in concluding this joint venture agreement ahead of other parties, because we bring that experience of existing technology, existing operating regimes, and we could then build and develop the project quite fast as well, utilizing our existing skills and experience. Where it does differ from our current operations is from the revenue stream and how it's commercially structured, in the sense that, unlike our current operations, where we only return the chrome, which is quite significant amounts per year, but which we return to our host mines without generating a revenue stream from it. From this JV, we will share in the revenue from both the PGMs and chrome. So that is a slight difference from our current operations. If you look at what does it contribute to our overall profile, so the JV in total is anticipated to produce approximately 11,000 to 13,000 ounces a year of 4E PGMs and about between 320 and 400,000 tons of chrome concentrate, in total for the JV, which means on an attributable basis to Sylvania, we'll be looking at about 5,500 to 6,500 4E ounces per year of PGMs and about 160 to 200,000 tons of chrome concentrate attributable to Sylvania.
You've worked for a while now, I guess, with lawyers, accountants, bankers, brokers. You've now signed the JV. Congratulations! But now let's look at the practical implications of that. Are there any particular work streams that you need to carry out to integrate this into the operation of Sylvania's current portfolio?
Yes, no, as you say, it's been quite a process, and I've been keeping the market informed, over a number of reporting periods already of the progress and, that we have been engaging with these partners for a while. But we're glad it finally has been concluded. So although there are many synergies and shared services, obviously, between the JV and the existing Sylvania operations, we will not formally be integrating it into our current operations or current portfolio, but rather manage it as an independent operation as a JV. And to this end, the JV agreement makes provision for Sylvania to be appointed as the manager of the joint venture on behalf of the parties. So we will staff and operate the processing plants, obviously leveraging on our existing experience and skill set. and we will also manage the capital build project on behalf of the parties. So we have obviously the construction of our existing 6 beneficiation plants that we built across the Eastern and Western Limb already, and the new MF2 capital project we executed have a lot of experience in the capital build. So we will be doing that. And fortunately, through the work already done to date, both through the respective due diligence studies we've done as well as the feasibility phases, we are quite far advanced already with the detailed design. So I think everything is quite well on track and quite easily actually to get into production.
Okay, let me leave you with a 2-part question. Not necessarily putting numbers on it, but first of all, what value is this adding to Sylvania? And can you remind the viewers, please, how it fits in with your stated growth strategy? Yeah,
I think it's quite important to see how it goes and aligns with our growth strategy. I think we've announced and communicated market before. We have a 2-pronged approach. So one is to look at how do we get value from our existing operations, and then also replicating our existing experience and skill set to third parties, which this is an example of, and then as well as optimizing value from our various operation assets. So this is a typical dump project, like our existing dump operations, which is looking at unlocking the value from third parties and a third party operation, and we would therefore look at growing our production profile in this regard. So it presents further the opportunity for us to diversify our revenue stream, also by including chrome and PGMs. That was the other part of our strategy, to say, okay, how do we look at not just relying on PGMs. So this adds a chrome revenue stream to our business, and through this relationship and experience, it obviously positions as well for similar deals in the market. And I think I've also mentioned before that we're engaging with other parties at the moment, in terms of similar opportunities, which we hope might also come to fruition. So I think strategically, the diversifying your income is quite important, and I think especially in the current market environment, where we have seen a sharp decline in PGM prices in recent months. But on the other hand, chrome is experiencing quite a robust market and near 10-year highs. And you can see how that chrome income then offsets significantly the lower PGM income. So that, I think, is an interesting and important aspect of this joint venture. And then, obviously, as I said before, geographically, by establishing our presence on the northern part of the Western Limb, this is the first operation of its kind, beneficiating chrome and PGMs from chrome ore or chrome tailings. And that might bring a lot of opportunities in the area from other dump or ROM risings. So overall, a very attractive opportunity, and I'm very excited about it. And also not just the opportunity, but also our newfound relationship or partnership with LMC, and also its parent company, Cromtech, which brings with them significant experience in terms of both fine chrome recovery, but also, very importantly, existing channels in terms of marketing and distribution for chrome, for the chrome product that we will be producing. So overall, as I said, I think quite an exciting project and linking very well with our strategic objectives.
Well, thank you, Jaco. You must come back and keep us informed about progress. It's always good to see you. That was Jaco Prinsloo, Managing Director, Chief Executive of Sylvania Platinum, updating us on the just announced joint venture with Limburg Mining in South Africa. That's it for this edition of Blythe Ray Business News. Thanks for watching.